Hi, everyone, and welcome, panelists. My name is Rahul. I'm excited to be moderating this panel on intelligent data and how it affects the investment in today's day and world. AI has transformed all aspects of investment, from signal generation to risk management. We keep hearing about new achievements every day, but a lot of things of these are, we never know what's a hype and what's an actual use case being used today. I'm very excited that I have a panel of expertise here who have been in this space for a while, providing alternative data, using alternative data, which is called intelligent data these days. And I'm hoping to learn a lot from them in this panel. So let's get into the insights. We'll start with maybe Michael can start introducing yourself, the organization, and how each of you fit in this AI and investment landscape, so the audience have a little bit more context of our discussions.
Thanks, Rahul. I'm Michael Marrale. I'm the CEO of 𝐸₼Science. We take a whole lot of data and turn it into insights. We deliver that via written research reports and a platform solution. And ultimately, this week, we're launching an AI overlay on top of everything. Our client base are primarily long, short, long only discretionary investors, but increasingly some more quantitative investors. We've got about 400 clients globally. We've been at this since 2016, and it's just starting to get interesting. Thank you.
Hey, everybody. My name is Kirk McKeown. I'm the co-founder and CEO of CarbonArc. Spent 20 years on the buy side before starting CarbonArc. Worked at Tudor, Glenview, and SAC Capital /Point72. What we're doing at CarbonArc is we built a two-sided platform where data asset owners bring their data to our platform. We structure it and deliver it to everybody from some of the largest consulting firms in the world to buy and sell side to corporates. We've got 70 clients. We've been at it since 2021. And we're really sort of focused on sort of the next phase of the AI economy, which is around data structure and the monetization of data structure.
Great. Thanks for having me. I'm Richard Lichtenstein. I am an expert partner and the chief data officer for our private equity practice at Bain & Company, the consulting firm. So I work with lots of PE investors, also some growth equity investors and others, to help them think about how Gen AI is going to affect their business, how it's going to affect businesses they might want to invest in, business they've already invested in. Also, that's what all anyone wants to talk about anymore is Gen AI, but I do also have a large team that thinks a lot about alternative data, and I love talking about alternative data. I love the rebranding to intelligent data. I think that's a big step up. That's great. And then also I write a Substack called Artificial Investment about AI and investing. So yeah, look forward to the discussion.
Hi, everyone. My name is Vlad Prelevic, and I'm a senior account director in Sensor Tower. Sensor Tower essentially enables hedge funds and VC funds to measure the global digital economy when they make investment decisions. So as an alternative data provider, we have data sets that measure web usage, app usage, advertising, as well as the Gen AI transformation and the AI chatbots. So yeah, in terms of the AI, we do have ways to track the recent disruption that's happening not only to web, but also to mobile ecosystem. So happy to participate, Rahul, and hopefully provide some good real-life examples on both the consumer and the customer side. Thank you.
Oh, sure. So it's interesting. Richard, you mentioned, there's a step up from alternative data to intelligent data. So I'm going to just sort of dive a little bit deeper into that and ask, what changed since ChatGPT came out and the Gen AI, with some practical examples, if you can share, where in your use cases, alternative data became intelligent data?
I mean, I can start. I'm sure everyone probably has a good example for that one. But, I think that there's two big changes that I've seen, both of which I think are pretty remarkable. I think one is, this is almost a cliche at this point, but the ability to process this unstructured data and make use of it has been really transformational for a lot of companies. It allowed them to do use cases that just weren't possible before. So I think a classic example of that I've seen now at several companies are responding to RFPs, right? This is something every company has to do in a B2B context. They got to respond to a proposal. And that used to be something that took days to do. And, it meant engineers or other people spending a lot of time on something that just might not actually go anywhere. And now, it's not that hard to have AI create a really good first draft of an RFP. And I see this across a lot of industries. I see this in our industry, in consulting. I see it in building products and, construction. I see it, sort of all kinds of different industries are doing this. And it leverages this ability of Gen AI to take in previous proposals, understand the context of them, and then use that to generate new ones that have the same format, similar ideas, and so forth. So that's the first thing that's exciting. But then the second thing I think is very interesting about this is that you actually don't need that much data to actually do useful things with it, right? Like I think with machine learning type approaches, it's just the more data, the better. If you need millions of data points to get useful things. I think here, like with this RFP tool, you don't need to get every single RFP you've ever done and tag it as win-loss and do all this stuff to it in order to make it useful. If you have 20, 30, 50 RFPs, that's probably enough to get a bot going that actually can do a pretty good job. And so that ability to actually make progress quickly with smaller data sets also is, I think, a pretty exciting new development.
Yeah, I think it's a great point about smaller data sets and the ability to debias them and scale them. From our perspective, and it's not actually about the tooling or the workflows, but it's more about data availability. And so, this is something that we've been evangelizing for since inception, which is data monetization. Most large companies, when you finally get a meeting with them and sit down with them and discuss, okay, we'd like to leverage your data in some way, like over the course of the 2010s and early 2020s, it was a really kind of issue that was a little contentious, right? And large companies had no interest. I think they've come full circle now, and I think it's a byproduct of this massive data cleanup that has been occurring since late 22, as the C-suite puts a lot of pressure on their teams to leverage AI-driven technologies. The answer is typically our data is a mess. And so that data cleanup that's been happening for 3 years now is opening up a lot of monetization opportunities, which is really, when you think about what a lot of us in this room do, is the lifeblood and historically has been a gating factor to growth.
I think the thing that I've seen is most interesting, but I'm not sure if it's really fully formed in the world yet, is just the business model of Silicon Valley has structurally changed. And economics of a software business are fundamentally different than the economics of a model-driven business. And Main Street is now Wall Street, trading different things, whether it's outcome predictions or tickets or T-shirts, right? But everything has become a trading shop, and they haven't gotten the memo yet. And so I think the fundamentals of the data stack are going to have to change because the way that these companies are going to compete is going to structurally change. Case in point, the way Meta and OpenAI and everybody is paying for talent on the West Coast looks a lot like what hedge funds have been doing to quant teams and firms over the last 15 years. But everybody's talking about these big paydays for these AI scientists. Those paydays have been occurring on the East Coast now for a couple of decades as people move from firm to firm, because model-driven decisioning is what's going to drive the alpha in the valley. But they're not set up like GP/LPs. So it's going to be really interesting to see how the economics of the space evolve over the next 12, 18, 24 months.
Yeah, and I would say on our end, we've seen qualitative data become intelligent data. And I think a good example there is our app's ratings and reviews data. So you can imagine any app that's in the App Store you can rate it, you can review it. What we do is we aggregate that data and present it within our platform. Usually prior to the launch of ChatGPT, that type of data was not super interesting to investor clients because they had a lot of noise. But with the advent of AI, it's easier to run sentiment analysis. It's more cost effective to run sentiment analysis on that data and extract actually a valuable signal that I've seen more funds, even smaller size, engage in doing so. So that's been a trend that we notice on our end.
Yeah, the one thing I would just say though is I guess this is maybe like a little bit of contrarian take on the data monetization piece, but I've talked to a lot of companies who've come to me and said, we got this great data set, like we can't wait to monetize it. And then you look at it and like it just doesn't actually answer any questions that you couldn't answer with the amazing data sets that already exist. So I do think if you're out there listening to this and you're thinking and you just heard that and said, oh my gosh, I'm sitting on a gold mine of data, I would encourage you to take a bit of a more of a use case approach, right? And which I don't think is you would say no to that, but really think about like, okay, but what can someone do with this data that truly is unique? What decision can they make that you couldn't have made before or couldn't have made as well? Or what problem does it solve or something? And then if you have an answer to that, then you maybe start with a test set and so forth and work your way to it. But I mean, I see a lot of companies that come to me and they're like, yeah, we got this amazing data set, like we can cover like 10 million people or 20 million people or whatever, but it just doesn't actually have any signal in it.
We did 850 meetings last year and probably did about 15 deals.
There you go. All right.
At least we can get 850 meetings, which means people are willing and likely to transact if the data has utility. But it's a great point.
But on that, like the sort of the internal data and external data piece, do you see that they are like competing at times, or do you find them complements in some use cases? Like I think 10% conversion from like 15 deals to 100 feet of 15 meetings is probably not bad in some of the things I've seen, which I think is sort of like a promise in terms of like when I have worked in some of the investment funds, like even simple notes from previous meetings is also very helpful in terms of analysis and insights. So where do you think that piece is? Where are we bridging the gap between trying to synthesize external data or internal data, or do you think they're still competing right now?
For me, I mean,
You're
we've
one of the
done
major external data providers.
So we're always looking for new data, but we've done a lot of work on our existing data. And more so like how we leverage the data, not the data itself. So like when I think about our AI journey, it's been going on for about 2 years now. We've had about 20 people committed to it. And a lot of that work has been done on the semantic layer. So like actually creating that semantic layer, which is basically like a translation layer between the data and ultimately the people who are performing the analytics.
Understood. Kirk, you mentioned, like the game is changing. Everybody's in the trading game now, which essentially means most organizations are trying to use AI in some form. What is the biggest challenge you see? Do you see data being a challenge, or do you think the modeling capability being a challenge, or do you think just the infrastructure and getting data engineers being the challenge for anybody trying to enter this game?
I think it's a combination of things. First, I think data silos are a very real problem, both on and off Wall Street. Data sits in different places. They, sort of don't always talk to one another. And then some of it is very much cultural, right? There's a cultural dynamic. There needs to be the right mix of mandate plus collaboration and team orientation across the stack, because it's not just a technology problem, it's also a data problem, and it's also an operational problem, both in sort of an optimization like RFP streamlining, as well as more sort of decisioning frameworks. And so, sort of fundamentally, it's going to take longer than I think the market is suggesting. I think there's a lot of low-hanging fruit.
Yep.
But once you get past that and go to full sort of transformation, it's just going to take time, like anything else. I mean, if you look at sort of the internet, sort of maturity framework launched in 94, 95, you didn't really start to see that sort of payoff until 2005, 6, 7. So it's going to take more time than I think people are underwriting.
Now, I think if you had someone on the stage who was, a Silicon Valley person, I think you get the view of, well, the data silo thing is going to get solved because we're going to have agents that can run around and get data from all the different sources and bring it together and create the data fabric. I think I would say that's possible. I haven't yet seen anyone actually really successfully do that yet. I've seen a few people getting closer, but I think that, you could argue that what I would say is this. I don't think the right answer at this moment is to say, we have all this data in different places, let's spend a lot of money to build a giant data lake, because I think at this point, technology may come along and save the day on that. But I also agree with your point, Kirk, that the speed of the diffusion of this technology is going to be slower than people want it to be. I mean, it may be faster than the internet, but it's not going to be like, 10 times faster than the internet.
That's right. I think from our end as an alternative data provider, how we're trying to solve for this problem is essentially to become a home for as many different data sets as we can, whether you're coming for web, whether you're coming for app or advertising. We're just trying to bring you and have the whole ecosystem with us, so you don't have to deal with different methodological differences and operate with multiple contracts, and you can work with SenseTower across different data sets. Yeah.
Got it. That's interesting. So on that point, what, like now the clients are used to not having to deal with a lot of these sort of mappings in the back end you guys are taking care of. What else has changed? Do you think they want everything in a chat-based format? Like, hey, I want to talk to the data, or what expectation has changed in terms of being able to use your product?
Yeah, that's a great question. I think, like all of us, I guess, in this room, we've kind of the AI chatbots spoiled us a little bit, where now we have less patience in terms of waiting for an answer or searching for a specific answer. We see that same thing with our investor clients, where they don't want to spend too much time within the platform searching from different reports and trying to figure out the answers themselves. They want to get an answer immediately. So what we're doing internally is essentially creating an AI chatbot that's called SenseAI. And you can imagine that, like, if you log into a SenseTower platform, you could go into a search bar, ask it a specific question, and it will give you an answer, or it will point out to the particular report that you are looking for. I think on the other end, I think a cool feature that we're also building is, if you're looking at a particular report, you can highlight, for example, there's a spike in monthly active users. Instead of you trying to figure out why that happened and spending half an hour, you can highlight that spike and it will give you the best guess as to why that happened, or point you out to the proper place in the platform. So that's how we are trying to address that from the client engagement side, because yeah, everybody is now a little bit more adjusted to just getting direct responses, and I don't blame them.
Yeah. You guys also see the same in your organizations when clients are coming, they want like a chatbot on top of everything?
Yeah, I think, and we're out with I'd call it more of like a prompting solution. There is a chatbot capability, but for us, like, we look at our own internal engagement statistics, like how our clients are using us. And so much of the work that we do goes unutilized. And so for us, I call it like an overlay on top of all of our work, because it surfaces a lot of the things that we do that historically have gone under or unutilized. And similarly, internally, our sales team has access to that for quick answers to questions from clients, whereas that question maybe historically would be a half-hour call with one of our analysts.
That makes sense. But a lot of like your underlying products also like reports, for example, right? But do you see this kind of thing in more structure or tabular data? Maybe Kirk could take that, if like, is that data still that somebody has to go work and build models on it, and less about trying to get inferences from more, say, textual information?
So what the world we're building towards is the idea that in 5 years, there's going to be 1 billion models buying data every second of every day to plan Mike's trip to Miami, or, sort of Macy's shelf space, or, FedEx's capacity, or, sort of Two Sigma's next trade. And those models are going to be sort of buying data on a ratable basis. It's going to be structured. It's going to be structured down to the elements that go into an entity plus an event structure to derive an impact. And it's going to be modeling cash flows on a minute-by-minute basis. And in that frame, it's going to be fully programmatic. There'll be no humans in loop. And it'll be sort of structured the way that high-frequency trading is structured today. And, sort of in 1985, if you look at the New York Stock Exchange, 50% of volumes were traded in blocks by guys on a floor of an exchange that no longer exists, and wearing jackets and drinking Adures, and that was how stocks were traded. And today it's a millisecond and a penny, and it's machine to machine for 90% of transactions. And the same thing is going to happen over the next 5 years on data structure. And so it needs to be ratable, reliable, regulated, and metered, right? And fully programmatic. And so that's what we're building towards. That's the world that we see coming. It's not here. Separate conversation.
It's an answer which raises like another 20 questions, to be honest. But let's start one of those. You mentioned no humans in the loop, and I think your take is like more and more humans will be out of the loop, and it will be machines doing stuff. And this is an open question, but I have sort of two-part question. One is, What other roles do you think are going to be sort of eliminated in some sense? Because you mentioned, in RFQs, there was somebody who was taking a look, now machines can do it. And when we were chatting offline, just the tagging piece, first 90% was done by humans and 10% by machine, and now it's probably inverted. You work with a lot of fundamental sort of analysts giving data. Now that the machines can give them insights, do you think these analyst jobs also sort of transforming in some sense? And the second piece, I'll probably come back to this later, but I'm just, is in 2018 and 19, when the machine learning sort of boom came, one of the biggest challenges was, hey, it's a black box. How do I entrust a machine to take all these decisions for us? Now machines are going in a direction where they're going to take significantly bigger decisions for us. How do we as practitioners get comfortable, and how do we get our clients comfortable for something like this?
Okay, well, you asked like 6 questions there, many of which were good questions.
The answer was like 20, raised
Okay,
like 20.
so I'll try to answer at least your first question, and then maybe I don't want to be talk. I can probably talk for the rest of the time to answer all those questions. So I'll start with the first question, but then I'm sure other people have other thoughts on the other questions there. So to your point about does AI kind of replace people's jobs and things like that? I mean, I do think that AI certainly makes people a lot more efficient, and that can, I think what I've seen to date is that hasn't translated into too many jobs actually going away, and more in people just being able to be more productive. And that might mean, of course, that future hiring is curtailed. So I now know people could do this faster. I don't need as many people. But to your point about, we were discussing data tagging, right? And I was saying that, a few years ago before AI, we probably had 90% of our stuff had to be tagged by a human, or at least a human had to review the tag, and 10% was fully automated. And now it's probably the reverse of that. But what we were also saying is what that allows us to do is have a lot more rows pre-tagged, right? So what we're doing now is, we have credit card data, and we've got 1 million companies tagged in there. Before we had, I don't know, let's say it was 100,000 or 80,000, right? And if you do the math, the humans are doing the same amount of work there, right? If you have humans doing 90% of 100,000, that's 90,000, and you get it. So so the humans are sort of doing the same amount of work, but now because the machines make them more productive, we're able to get a lot more. That gets us that long tail of companies. And for a lot of our investor clients that are looking at things like buy and build, the ability to get those smaller companies and track them is actually very valuable. So, I think for us, we see real benefits. But again, at least at this moment, the answer isn't we need a smaller team, right? It's just now that team they're like superheroes. So it's great.
Yeah, we've seen some benefits on the headcount side, but really on the margin, I would say mostly in technology, where our data scientists and our engineers are getting more throughput, leveraging some tools. Hasn't really worked its way into the research side yet. I am very encouraged as companies develop more tools to leverage automating model building within Excel. I think that is a potential game changer for investment banking, for buy-side analysts, for sell-side research analysts. So eagerly awaiting those kind of technological improvements. But in general, it's kind of a waiting game in a sense.
To build on Mike's point, one of the things I'm concerned about is the training of many of the industries that are going to have disruption, particularly at the entry level, including sort of investment management and consulting. A lot of those first couple of years are awful years, where you work a lot and you put a lot of time in to build models and sort of rip PowerPoints and do the things. And there's sort of a growth trajectory that you go on the other side of that, where you've learned from just by doing over and over again. And I do have this concern as a guy who spent a lot of time in the office when I was younger, about the training component and the sweat equity that goes into entry level across these different industries that aren't sort of that are more hands-on in terms of hands-on keys. There's news out, I think yesterday, that Palantir has now decided that college is no longer a thing, and is bringing high schoolers in. We are seeing sort of an institutional sort of framework around how training young people work that I think hasn't been. Everybody's figured out the solution, but nobody's figured out how to solve the problem that's going to be created from it. who's going to do the work?
Well, I think I couldn't agree more. And I think the big problem is, we might reach a point in the future where the AI is so good that it's okay if people were never in the trenches doing it themselves, because they never have to understand how it works. Like, I don't know how to calculate a square root by hand, but that's okay, because if I ever need a square root, I have a calculator in my pocket. It was fine. And if you might get to a point where building a cash flow model is so straightforward that the AI just does it, and the fact that you don't know how to do it is okay. But we're not at that point right now at all, right? And when the models generate stuff, the humans have to be able to look at it and understand is this right or not. But it's much harder for someone who's, just out of college, doesn't have a lot of experience, to look at something that an AI created that kind of looks right and figure out, is this right? That's very hard to do. It's much harder to do than actually just building from scratch. So I agree. I think we're going to have, at least in the next 5 years, we're going to have a real problem of getting the junior people skilled in the right way. And it's going to be a challenge. I agree.
Yeah. I mean,
It's an interesting challenge, because the junior people they're not experienced at managing people, but to get the most out of AI, and maybe the AI of a year or two from now will essentially be a management exercise.
Yeah, I mean, I also wonder what are the social implications of people missing out on college and not being in the office. Yeah, I don't know. I think from our side, I still personally work with a lot of analysts. I haven't heard from clients that they're replacing analysts with AI. I do know that a lot of analysts work with AI. I've heard that. And we've also seen the demand for our raw data sources since the launch of ChatGPT increase significantly. And I think that's probably because AI has made it very cost effective to run your own models on our data. So instead of coming to us and buying our modeled estimates, you're just going to ingest our own data and you're going to do your own model. And again, those are not just big clients who do have the resources, but also the smaller clients that usually wouldn't be doing that. Yeah.
No, I think that's a great point, and I think it's sort of a natural pivot to the question which I've been dealing with is, so one is how AI is affecting the investment, and the investment we're talking about right now was, the stocks or bonds or whatever. What are we doing investing, and how are we investing in our own organizations so that it's not taken over by some companies? For example, that you mentioned, it's very easy for any small company now to, run up a sentiment model, which used to be really, really hard earlier. What are we doing in each of your organizations, for example, to sort of, are we trying to get more AI people in? Are we trying to buy more infra? And how are we thinking about our AI strategy to keep your firms relevant?
So we're investing in subject matter expertise and tooling, essentially. So things like Cookbook internally, which we've developed as a way to really ingest and harmonize and reconcile data. Things like MCP, which we're building, will be in the market in first quarter with an 𝐸-Science MCP, which is really what buy-side clients seem to be evolving towards, having an MCP from each of their providers. So yeah, just tooling, and I think that subject matter expertise layer is going to become increasingly important, especially as our current subject matter experts will spend less and less time on tedious, mundane tasks and more time thinking about the companies that they cover, the industries that they're in, and ultimately what our clients need through conversations to understand what our clients are really looking for.
I think so much of it is just about, honestly, at this stage of where we are. I mean, if you've been in the middle of AI, it feels like we've been talking about AI forever. But the reality is that there's a lot of people out there that have basically never used ChatGPT or rarely used ChatGPT, that are really far down the curve. And I think, at least at Bain, step one has been just get everybody using this stuff all the time. Because once you start using it, you start to develop intuition for how does it work, what's it good at, what's it not good at, what apps do I need to build, or custom GPT should I build, or whatever. And the ideas just start coming at a big pace. I mean, I will say at Bain, we've got at this point, the stat I saw recently was that 85% of our partners, right? And the partners are, old people like me with gray hair, and they're using it every day. So now, I think we also, in the same stats, there were some other stats that suggest they could use it even more effective. There are ways they can use it even more effectively. But the idea is that if everyone is kind of using it as part of their work and how they do their job, that creates the right intuition and helps us push forward to, find new, cooler ways to use it. I mean, so that's how we're thinking about it.
Okay. Yeah, I think on our end, I would say so far our competitive advantage has been the real user data. So, the resource for our usage data are our panels. So essentially the company builds apps that publish within the App Store, and we are essentially able to track real users. And we think with the advent of AI, especially if you think about how AI chatbot works, if you were to track prompt data or usage data, the AI chatbots are very personalized. So if you're trying to, track AI chatbots in a synthetic manner, I don't think you'll be able to get that personalized aspect that you would be able to get that if you have real user data, because me and you, Rahul, might ask the same question at the, Chat GPT, and it's going to give us completely different answers based on what it knows about us. So I think that competitive advantage becomes even bigger in the AI world, where a lot of search now goes through AI chatbots versus just only Google.
In thinking about sort of the AI economy, which is your models, your chips, and then your data structure, we're in the data structure part of the world. And if you think about data assets, there are different asset classes. There's market data, there's images, which includes satellite radiology. We're living in the transaction data space. So, sort of fundamentally, there's two parts to building sort of an exchange-based business. One is the platform that does the thing, and we're patenting everything we can on it. We launched our MCP today, generally available, and then there's the content on top, right? And so the key with the content on top is pulling, attracting more interesting, unique data asset owners to monetize on the platform to drive more use cases downstream. So the content play is just getting more cool stuff on the platform. But then from an AI perspective and from an IP perspective, we're patenting everything we can, and we're trying to attract as many talented young engineers. And then we're siloing across each silo in the firm, looking at different AI tools to enhance and make things move, because we've got 32 employees. So we're trying to keep that number flat and scale the shit out of everything else.
It's interesting.
Technical term.
We heard a lot of things which AI is doing for you guys and is doing well. Can you guys tell me one thing which you think AI is not doing well and you don't expect it to solve for you in the coming future? And it might be anything you think, and people are attempting, but you think it's a waste of time.
Sales.
Thank God.
I think AI is doing a really nice job marketing. There's a lot of marketing. I do think sort of differentiation is going to be a thing. I think seeing how the models differentiate over the next 12 to 18 months is going to be really interesting, both at the hyperscaler level and then all the verticals.
That's interesting.
I think agents, again, are very exciting, but are not yet sort of living up to the hype. I just have not seen very many agents in the wild that are actually doing interesting things. I think part of this is security concerns, that if you make an agent too powerful, then it can get hit with a prompt injection attack, so we don't make them too powerful. Part of it is that just things like tool use just don't work all that well. It runs into trouble too frequently. But I think everyone has a lot of great ideas for what agents can do. I think, Kirk, you came up with named a ton of them just on this panel. I think it's just not quite living up to that promise, but I'm hopeful it will in the next year or two. We'll see.
Yeah, I think maybe to add to Kirk's point, I think we've also seen AI enable us to increase the output in terms of marketing significantly over the last few years. I think where it's also helpful is just organizing internal documents. So we have an internal AI that's called Sensor Chat, which is essentially just Chat GPT that's trained on your own data. I also think what Salesforce did with Slack recently, it has been really interesting and game-changing, where you can now query Slack and it will give you answers. And most of the organizations that use Slack, you always spend time trying to find the right info, and now it's right there, and it will also quote the conversation that it's pulling the data from. Not to rep Salesforce too much, but yeah, it's great.
Awesome. I think we are out of time on the forward-looking note, but I really want to thank my panelists. Please, quick round of applause for the panelists. We love the insights. And I guess all of us are looking forward to what the next few years bring in the AI space. Thank you.